Welcome on board Ajay Bagga and figure out what he's making of the market right now. Ajay, hi, afternoon. Good to have you on the show. Just wanted to understand what the strategy is right now. Put fresh, cash to the work right now in this market, or just sit on the sidelines and ride the trend?
I think sitting on sidelines will be better. The positive is, Aisha, the volatility increased only in the equity and the FX market. The rates and the credit markets did not see volatility increase last week. So it wasn't a pervasive panic, even though it looked like that, because the leverage positions were trying to take out money from wherever they could. So we even saw gold going down because gold positions were booked out and used to settle the leverage. So we had a pretty disorderly yen carry trade unwinding, which led to a risk event and a risk of in the equity and the FX markets. Money went out from emerging market currencies and beneficiaries of the carry trade like the Aussie and the Mexican peso. Those were the currencies that got hit, and equities we have seen across the world. Coming back, it takes a much longer time. There is data which shows that once a US VIX crosses 35, it takes about 170 days on average to come back under 17, 18. So the starting point was about 20, went up to about 38 and a half. Now slowly it's coming back down, but that's a very laborious process. And add on a bit of geopolitical risk and add on a dash of a slowing American economy. You have the makings of a stalled further rise in the market. So I would say sideways might be a better strategy, or waiting this out might be better. Both shorts and longs will get caught out on a daily basis because the volatility is so high.
Okay, sure. Sideways, just wait out for it to pass by as well, is what you're saying. But Naresh, what I want to talk about is in terms of certain stocks. We have something like an HFCL that's under pressure. We've seen a run, all these chemical names be under pressure. Anything interesting on the charts that one would be looking at for any of these names, or still an avoid coming in there?
So it would still be an avoid because the rally also in the chemical names was a struggle. It did not see a clean move across the board. We kept on seeing corrections all through. 10% move also in a lot of these names. It wasn't a clean one. And after today's crack, it is across the board. So in this case, a correction of 15-20% from the top would be a minimum expectation. So apart from Aarti, others have not done so. So I would wait it out and not be in a hurry to buy any of the chemical names.
Okay, not in a hurry to buy any of the chemical names. Kunal, let's talk about ONGC, Oil India. Obviously, yesterday, last evening, there were some news flows in terms of, possibility of a withdrawal that one could be watching out for the windfall tax. But ONGC, Oil India, Gujarat Gas, or any of these oil and gas companies have seen a bit of a run-up in the last 1 month. Anything exciting that you would be watching out for there?
Yeah, I think both of these charts are quite okay. I think even after today's downtick for ONGC, or 1.5-2% downtick, I would still believe that it's a very good level to try and look out for maybe adding some few more points for ONGC in terms of a contra buy, because the chart structure for both of these names are very positive. Now look at Oil India today also. I think the stock is up 2.5-3% plus. It's made a fresh high about the 680, 685 plus mark. So I think chart-wise, both of these stocks are looking very positive from a structural point of view. Yes, because of the market volatility, you might see these stocks underperforming for a couple of days. But I believe that the probability of recovery for these stocks is pretty much on the higher side when we look at this as a positional play.
Right. Okay, since it's all about IPOs right now, the street has given a thumbs up to the Kunal Bahal-backed Unicommerce Solutions. In fact, the SaaS player debuted at a good 120% premium today, along with a stellar show from First Cry as well. Sharad is here to tell us more about the same. Sharad, we don't seem to be getting...
Interestingly, the overall listing is coming above the expectations, and the subscription, if you look at it, that's coming at almost 168 times. roughly 277 crore was raised from the IPO. And if you look at the company itself, the company is promoted by the holding company of Snapdeal and also Rohit Kumar Bansal. Now, overall, it's a SaaS platform-based company which will be offering software products to help businesses grow. Also, they are into warehouse as well as inventory management system. Interestingly, the annual transaction run rate is also on the higher side as per the industry numbers, and in FY24 also the revenue jump was almost 15% on a year-on-year basis. Interestingly, this is the only profitable company among the top 5 players in the industry during the year fiscal 23.
Okay, surely a bumper listing coming in from Unicommerce and First Cry, but on the listing day, stellar debut from both of them. Listen in to what the managements of the company had to say on the same as well.
We'll continue to grow organically from here on unless we get some exciting opportunities from an organic growth standpoint. For last 2 years, we haven't acquired any company for last 24 months. But we continue to evaluate new opportunities. So largely it will be a function of organic growth as we go along. Really excited. We are focused on creation of value for our young parents as well as for all our shareholders. Now our journey to join hands with public investors has just started from today. So we are very happy, very fortunate that hopefully we'll be able to compound value creation for all our new set of investors from this day on.
By the 15% growth in revenue ahead of the e-commerce market growth, we doubled our PAT. So going forward, our goal will be to continue to deliver e-commerce market plus growth and obviously a faster growth in profits.
Significant portion of our revenue growth can continue to go to our bottom line, and we have historically demonstrated where our PAT grew almost double from FY23 to FY24. So there is a significant operating leverage in the business, and we have historically demonstrated not only consistent revenue growth but expanding profitability, and this is a business which continues to generate cash on a regular basis as well.
Okay. Kunal, I'm going to come to you. What are your BTST trades for today?
So in terms of BTST, I'll go with one buy and one sell. The first one is one Balrampur Chini. That's a chart which is looking attractive. At earlier given targets closer to 485 to 500 for the stock. It's crossed about those levels, so would continue to be bullish on the stock. And now traders could look at a trail stop loss of 500. And for those who are looking at a fresh buy, keep a revised target of 540 for the stock in the near term. On the sell side, IOC is something which is given a breakdown on the short-term charts, breaking below the swing support as well as its 50-day moving average. So would suggest the sell with a target of 160, stop loss at 170.
Right. Naresh, what about your BTST ideas?
So would be a buy on first on Reliance Industries. The stock is holding on to 2900 levels. Stop loss to be kept at 2900, expecting a bounce towards 2970. Second is a buy on IOC. We are seeing correction across the whole OMC space. Back to the strong support zones of 160, 162 levels. So stop loss at 162, target price of 172.
Ajay, I'm curious to get in your opinion on some of the new paper which has come out. I mean, today, of course, there's been Unicommerce, I beg your pardon, as well as the Brain Bees or First Cry. And then, of course, the recent listing, Ola, and what a stellar debut and performance thereof it's been. Any of these IPOs that you've invested in?
So particular stocks, Aisha, I don't talk about.
Sure. Okay. Any themes that you've liked in the market?
IPOs overall, we've seen a lot of oversubscription, and that's a function of listing gains. So we are probably somewhere in the mid-cycle of IPOs, and we are seeing a very strong listing gains. That's the driver. It's not per se the quality of the company, but a lot of liquidity on the sidelines, which is driving the IPO market, and looks like a bumper year for the primary markets. There is good liquidity in the secondary markets also. But then why are we stalling? We are stalling more because of the global issues. So, primary IPO kind of focuses people's mind on a few days issue, and a very focused advertisement, focused media presence, and that's what we are seeing. And people have been getting good returns in terms of investing on a leverage basis for a few days and making good returns. That's what's working right now. The fear is especially the SME segment, where any kind of paper is getting very strong oversubscription. When those chickens come home to roost is the problem. But probably in the cycle, we are still mid-cycle. So still some way to go before we get to that froth or euphoria. But the secondary markets on the same end are suffering, A, because FI is taking out money, and second, because of the global macro or the global risk off that's happened.
Kunal, interesting moves that we're seeing, or, a lot of buzz around these smart meter stocks, so Keynes Technology, Genius Power, HPL Electric. Anything interesting that you would look at in terms of this? Keynes obviously has that EMS side also coming into play for it. But anything you would find interesting?
Yeah, I think Keynes itself is a very good chart, because I think after today's up move, the stock confirming a new high, breaking past about 4,700 mark, I think is a classical case of a price volume breakout. But the concern which emerges for many of these stocks is the lack of follow through. Now, there are many stocks over the last many days which have seen 10%, 20% up circuit or closing at the higher point of the day for themselves. But then post that, these stocks have gone through a correction of 4-5%. Some of them have gone through a correction of 1 week or 7-8 trading sessions. So I think the concern over here is the lack of follow through, and given the way the markets are panning out, I think there could be a possibility that the likes of Keynes could probably drift down a bit lower in the next couple of days before it tries to get back into a breakout mode. So I think the best way to try and trade these stocks is to let them first give signs of a breakout and then buy these stocks on a retracement. So after a 10% up move, if these stocks retrace by a margin of 3% to 5%, that becomes a good buying on dips opportunity.
Okay, buy on dips opportunity surely is one we are watching out for. But let's listen into that buzz that is going on around smart meters as well, and what are we expecting? Sharad is joining in with us with all those details.
Well, yes, smart meter themed stocks are in focus, such as Genius Power, HPL Electric, and even Salzer Electronics. These stocks have been buzzing in trade. Now, industry buzz is that larger state government orders is expected to come in over the coming months. And interestingly, yesterday, Andhra Pradesh government launched a prepaid meters coming in the government offices. Apart from the institutional orders, expectations from the state government, the smart meter program is expected to enable almost 1.5 lakh crore investment in the prepaid smart meter segment, and overall the target for 2025 is almost to make the smart meters come in 25 crore homes in order to replace them from the traditional meters. Now, there are two players largely involved, first one being Genius Power and HPL Electric. Over there, their order books ranges between 3,700 crore to 21,500 crore rupees, but the valuations for both the side is on the expensive. Apart from this, conglomerates such as Tata Power, Adani Group and GMR also have exposure in the smart meter via their arms or wholly owned subsidiaries. Interestingly, the smart meter, the industry size as per MOCL, it's ranging between 48,000 to 60,000 crore rupees. And as per National Grid mission statement, only 1.3 crore households have actually installed these smart meters, and of course the runway itself is 25 crore, and of course this is coming in for the next 2 years. Also, there are certain risks involved in the smart meter theme, the first one being of course the slower execution for the implementation of the smart meters, also higher charges, as some corners have reported that the charging has gone up, and that is something to watch out for, and of course the elevated valuation which I had actually pointed out. Now, today itself we had done our Khabar segment also, where Keynes Technology was in focus, where the Khabar in the street is that their smart meter manufacturing facility in Telangana is expected to start their operation in a month.
Right, okay, that's the take coming in on what the buzz is around the EMS plays. But Ajay, you think, a large part of the rally when it comes to the EMS play is behind us?
No, valuations are quite elevated. That's the risk we are facing. So yes, a couple of years, execution is already in the price, but the scope is huge, Aisha. Just the size of our market and then the size of the global market for the EMS players, if they can offer products for the global markets, that's so huge. So there will be parallel introductions of related products, more lines coming in. But the issue will be execution and at what price. Those are the things we have to improve logistics. We have to improve a lot of other frictional issues in the economy, and we have to go up the value-added chain. What China has done very well right now, it's between us, Vietnam, Mexico, to some extent Indonesia, that these players are going into Malaysia. Again, a smaller market, but in terms of manufacturing, they can compete with us. The runway is huge. Execution is an issue, and the valuations are already quite elevated. So, as an investor, you will struggle right now. If I could find these cheaper, that would be better. Otherwise, the way is that you go on investing in them regularly, but business models are very good. Business models are good, but valuations are too high right now to justify fresh investment. So better could be regular investing, buy every month a bit and build up a position like that and hope for a correction.
Sure. Ajay, I want to talk about, Hero Moto as well as Apollo Hospitals. Both are set to report their numbers today. Before we go across and listen to what the expectation is, what are you seeing in terms of here for Hero Moto or Apollo Hospitals? Anything interesting that you find?
I would divert that to Naresh because I don't talk particular stocks.
Sure. Naresh, what are you looking at in the two-wheeler space? Hero Moto, do you think that's something you would look at?
So Hero MotoCorp is making a consolidation after that huge rally. So given that the rest of the auto names have not seen strong price action, would wait out for the numbers rather than take a preemptive move here. Same on the other hand, Apollo Hospitals is interesting for the case that the previous all-time highs are around 6,800. If that crosses post numbers, that would be a strong breakout. So Apollo looks relatively a better chart compared to Hero Moto.
But Ajay, I mean, not Apollo Hospitals for sure. We were talking about its earnings. But within the entire healthcare, and I'm going to throw in the diagnostic space as well here, do you still think there's value on the table? Because, a lot of these stocks have already run up a whole lot.
Again, valuation is the issue, but within that, I think hospitals, you have a huge growth path. So, and these well-run hospitals with excellent management, there is going to be both, a lot of the domestic population getting unlocked and being able to afford coming to these hospitals thanks to health insurance, both from the government side as well as private health insurance catching up, and then medical tourism. The entire Middle East belt and a lot of Europe also, a very standard procedure in the UK means waits of 250 days, 300 days now. And I think a lot of that medical tourism can come to us if we can build a proper pipeline and be able to market. And the domestic market itself is so huge. The saturation or the penetration of medical care is so low. And as health insurance makes the affordability factor go away, these companies will do very well. So hospitals, I would say, are a big play on the India theme, and they'll do very well. Most of them are extremely well run, good managements, able to generate a good ROE on the investments.
Ajay, so good to have you on the show. Thank you as always for taking the time out and joining in today.
If you like this video, then like, share and subscribe to ET Now.